Hello friends, this is your friend Arun from Live in Germany channel. So today I'm back again with one of the important and interesting topics of the day, how Germany escaped a technical recession. So before we move on to this, for those who are new to this channel, I am Arun. I make videos regarding integration in Germany, daily news, latest updates, tax return and so on. So please do click on the subscribe button, or you can go one step further by joining on the WhatsApp broadcast list. I can send you personally message using this list. So send me a message or join the group which is given in the link below, and then we will see how to get it done. So today's topic regarding the how Germany escaped the recession, I have put the agenda like the following. So first I'll tell you like how it happened, like what, and then like how what did the Statistics Office of Germany has to say regarding this, and then afterwards the finance minister, what was his comments, and afterwards the external factors influencing the current situation, Economist View, and lastly why we should not actually be worrying about this recession and what is the major reasons I found according to a study which is released recently, and lastly the risk still existing and the government's perspective on the budget. So this will be the agenda. So let's move on to the content. So the first one is introduction. So Europe's largest economy and world's fourth largest economy, Germany, has escaped a technical recession. So for those who are new to this term, recession is something when it is officially declared when the GDP growth is going in a negative consecutively for 2 quarters. So say we are right now in the fourth quarter, and then previously were in third and second, so each year has four. So if 2 quarters are showing negative GDP growth, then it's technically recession it's called. So Germany had a 0.4% growth on the first quarter. Second, it shrunk by zero point 0.2, and luckily when everybody was expecting that we would fall into a recession, Germany rebounded and showed a growth of 0.1. Although it seems like very negligible, but still it's a very positive sign for a very huge economic country like Germany. So in the next section, I'm going to explain what did the statistics has to say regarding this, how did Germany achieve this growth, and let's see the next content. So the statistics Bundesamt has said like this has been due to the following factors. So first thing is manufacturing segment, which contributes highly, had seen a growth of 1.4% in orders. So they received more orders, so they contribute more to the economy. This sudden boost has actually helped to kick its GDP growth. And next is, as you all know, like Germany is a country that depends almost between 45 to 48% on exports. So exports also had a rose in September by 1.5%, so which actually kickstarted this growth. And last thing was the actual stability of this economy on a domestic level is very good, and almost 45.4 million people are currently employed. That is 0.8% higher than what it was previous year. So according to statistics, it's also we are seeing some positive signs that's rising. So that's the thing. So let's see like what did the finance minister has to say regarding this. So what did he say? So these are his words in English which was translated. So looking at the German economy, which is really resilient and globally active, we should all understand that there's a slower growth around the world, and this has an impact on the German economy as well. So this is obvious fact. That's what he says, and what he says is we are optimistically cautious, and it's a slower growth but not a crisis. These are his words. So they are very optimistic that they will come out of this positively. So let's be happy about it. And next thing, like what he said, like what are the external factors that's actually causing this? I have made an exclusive video on this. You can find the link on the card. Uh, Let me explain in few words what the situation is. First thing is this US tariffs on Chinese goods and the trade war which they started. So this is one factor that is still going on. but there has been a positive news from at least from Trump saying that we are rapidly moving a progress towards the Beijing talks, I mean with China, and this is a positive thing. And also the Brexit has been moved to January 31st of next year. But if the Prime Minister of Britain, Boris Johnson, says like on December 12th he wins the elections and then is ready to sign, then it can even happen faster. So these are the external factors that is actually causing this technical recession. So in this section, I'm going to explain why we should not be actually worrying. So this was a study made by one of the journals. All the sources will be put at end of the video. You can read it or even in the description. So the first thing, so we have had, I mean, Germany has had almost 4 years of surplus in their budget, the last years, and also this year, till half of this year, almost 450 billion euros of surplus is still existing. That means more money than what they have planned. So these money can be used to tackle or cushion the effects of unemployment if it happens or other consequences due to this economic slowdown. And what more is they had a program called as automatic stabilizers. This is the term. So what it means, it's a scheme that encourages us companies not to fire any underutilized employees. So this concept was used in 2008 and 9. This worked well, and now they are more robust. So they want to make sure that the unemployment rate is low as possible. So more people should actually work and be in jobs. So this will keep the domestic economy robust. So this is one of their actual plans. So this is very positive. We could also see in lot of information when I posted my videos regarding this. And the next is regarding more stimulus. Like already you have seen that the tax finance minister has told like they will remove the solidarity tax, which is like 5.5%. So people will be having more money in their pockets. So one step further, what happened is the economic minister has also announced that they will cap the taxes at 25% for businesses. So this will also reduce the stress on them, which will in turn let them have more money to pump into their field. So this is a one positive news. More technically, they have said like the structural budget, which they call it, will be almost 1.2% closer in 2021. So even if there is some kind of problem, they can still make some gap for this to happen. So they can even go to a particular level in negative. So I don't want to go more into technical. So this was one thing. The next point is regarding the healthier Eurozone. So compared to the last 10 years or before 10 years where Germany was the only country or almost the only country which had a very good economy, right now there are a lot of other partners who could actually support and then bring the economy up. Say for example, the growth of French is growing. You can see the link above. And for example, also the Greece wants to has loosened its capital control system. So more capitalism is booming there. So a lot of employment jobs are being created. Also, Italy wants to avoid getting more credit and focus on re-energizing themselves. So these are all positive signs actually. So also the Yellow Vest organization has actually kick-started the economy in France, which is a good thing. So there are more supporters now, so we should not be actually worrying. The reason for this thing is Germans is an export economy, and its export is not always somewhere in other continent, but also to its neighbors. So when its neighbors are more economically strong, that means Germany will also be strong. So this is a fact which we should actually concentrate. And the last fact is regarding the banking system. So before 2 years, if this has happened, the German Deutsche Bank had a lot of exposure on financial items all around the world, but now they have pruned their investment in such a way that it is actually a bit more resilient, more robust, So this is actually a positive thing. So this will actually enable the German economy to be stable as much as possible. So that's why you see low interest rates and people are investing a lot in construction sector, which is booming right now. So this is one of the facts regarding this. So next I will tell about what are the different economists' view. So in this section we'll see what the economist has actually told about this. The first economist is from IMF. Shankar Iyer. So what he has said is the following: the downside risks, including the trade tensions, the hard Brexit chances, are still there, but still the domestic market is functioning very good. It's robust, and it is also supported by the data sheet from the private and public companies. So this is what has come from the IMF chief for Germany. So it's a very good reason. And the next is from Carsten. I already quoted him in the previous video. So what he has said is, after 10 years of almost unstoppable economic growth, a short period of such stagnation is almost necessary. It's not a very big problem we should be actually worrying about. We just have to be cautious. So these are his words. So there is a positive perspective from economist point of view, and the European Central Bank has also said, like the new chief has also said, like rich countries like Germany and Netherlands should actually invest more and then support the other countries which are struggling. So this is what they have said, like they are hoping to make more quantitative easing in the next stages. So this is what is happening. So last thing is, how did the government react to all this? So this is the thing, they have something called as a zero budget or a black zero. So this means they will not go to a deficit. It's like, I have only 10 euros in my pocket, I'll spend only 10 euros, I will not borrow money. That's the concept, like simple terms. So what they say is, okay, we will see like how the situation is and then we'll move on, but right now we don't have to actually put a lot of money into like outside and then make this happen. So they're a bit hesitant, but still the wise men, it's a council which is like high economists in Germany. This council has also suggested that such a step might be necessary, but they are also not like emphasized immediately. So let's see how this can actually happen in future. So the effect on budget is this following. So they will not break this black zero concept until there is a huge drop in the growth. If it happens, then there is always a cushion. The last point is the risks. So what is the risks they have? The first thing is the risk in the automotive industry, because almost 1 out of every 8 employees in Germany is in automotive sector. So this industry is actually being affected by, say, climate control, climate change, and also the self-driving cars, electrification of cars. So they have to move faster. So this is one factor they are actually worried about. They have to keep up with the competition. So, but this is all will happen anyway. So I hope that Germany will rebound much strongly and positively. So let's celebrate this and be positive and be focused, and see you in the next video. And thanks for watching. I hope it was informative. Bye bye.